with all the uncertainty in the market going on right now, it is now the best time to help supplement your additional income by buying Treasury bonds. And with this ETF, TLTP, the Amplify Bloomberg US Treasury 12% Income ETF, this ETF is designed to provide investors with a high income stream by combining US Treasury bonds with a covered call strategy. Now, this is a fairly new ETF. The launch date was last October of 2024, and it's launched on the SIBO exchange. And 3 reasons to own TLTP ETF is number 1, we have targeted income. This strategy targets annualized income of 12% annualized, with a potential for additional US Treasury bond income. Number 2 is going to be risk mitigation. So weekly covered calls can help mitigate risk by providing additional income in volatile markets. So while a lot of people's portfolios are getting absolutely crushed, this ETF is going to continue to provide monthly distributions by selling covered calls on Treasury bonds. And number 3, it's going to be convenient access. This ETF provides simple, efficient entry to a tailored US Treasury option strategy via a single ticker. And we will go into what exactly that ticker it is going to be. But let's go over the objective and strategy. The Amplify Bloomberg US Treasury 12% Income ETF seeks investment results from generally correspond to the performance before fees and expenses of the Bloomberg US Treasury 20-plus year 12% Premium Covered Call 2.0 Index. And compared to a normal 20-year Treasury bond, you're going to have additional income. As we see, it's going to target a 12% annualized return because we're going to be selling weekly covered calls against those Treasury bonds for a higher level of income. Now, an important thing to note is it does have fees and expenses. So we do have a total expense ratio of only 0.38%, which is fairly low compared to other ETFs in this covered call strategy space. And this ETF fee is broken down by a management fee of 0.30%, and then acquired fund fees and expenses of only 0.08%. So every $10,000 you're investing into this ETF, you're only going to lose about $38 per year in fees and expenses. Let's go over what everyone is excited about, and it is the yield. So as of March 31st, 2025, this is the distribution stats. So this is going to be distributed every single month. And as we mentioned earlier, the distribution rate is going to be around 12%. Now, if we look at the price of TLTP, it's been around $25 and dropped all the way to about $22, $23 per share. So only about $2, a $3 drop, which isn't bad considering the fact that you're getting paid every single month about 1% of the stock price. And of course, we have to go over the fund holdings. So we are holding the iShares 20-plus year Treasury bond ETF, which is going to be a weighting of 62%, almost 63%. And then we have the United States Treasury bond 4.25%, which is going to consist of 37% of our portfolio. And then, of course, we have our covered call right here, TLT covered call $87 strike. So this iShares 20-year Treasury bond ETF is going to be ticker TLT, sitting at a price of about $87 per share. And if you take a look at the past month, it's down 3%, and it does provide a dividend yield of 4.3%. And these distributions are actually paid out monthly. So a lot of people are holding this ETF for that 4.3% dividend yield, especially during times of economic stress, such as the ones we're currently in. A lot of people are struggling to pay their bills, pay for groceries, pay for gas, and they're seeking income from these ETFs to help supplement their day jobs and help pay off expenses. So we do want to note when the 20-year Treasury bond will rise and how the price of that ETF is going to perform over the long run. So the price of a 20-year Treasury bond generally rises when interest rates fall, and conversely, it declines when interest rates rise. So when we have high interest rates, the price of the 20-year Treasury bond is a very good investment. And as we saw earlier, we're currently yielding a 4.3% because we're still in the time where we have high interest rates. Now, say we go back 5 years, back to a time in 2020 where interest rates were very low. It was next to none. This ETF absolutely skyrocketed. So honestly, right now is a good time to get into the TLT or TLTP, which was that option income treasury bond strategy, because interest rates are very high right now. And while this ETF is very new, the Amplify Bloomberg US Treasury 12% Premium Income ETF, it has actually outperformed the S&P 500 year to date. It's pretty much break even, 0.04% down compared to the S&P 500, which is down 11% year to date. And since inception, October of 2024, the S&P 500 is down 10%, and TLTP with dividends reinvested is only down -4%. And we can really see how stable this line is compared to the S&P 500. The blue line is going to be TLTP, and the red line is going to be SPY, the S&P 500 index. So it is very volatile than the S&P 500. So for those people who don't want to hold shares of stock during market volatility, TLTP is going to be a great option for consistent income. Because we don't have a full year of TLTP dividend history, it only shows a dividend yield of 5%, but it really is providing a close to a 12% annualized dividend yield, and it pays out monthly. Our stock price is currently at $23 per share, and as we can see, the cash amounts of these distributions are going to be about, you're pretty much getting one share every single month. November, we got 25 cents. December, we got 23 cents. January 23 cents, February 24 cents, March 23 cents. And if you do the math, that pretty much is about 1% of this ETF every single month, giving us an annualized return of about 12% dividend yield. Now we also have to consider the risks. So there is obviously interest rate risk. As TLTP invests in long-term treasuries, it is sensitive to interest rate fluctuations, which can affect the bond prices. And we also have option strategy risk. The covered call strategy may limit upside potential if the underlying securities appreciate significantly. And then of course we have liquidity risk. The fund's option strategy and concentrated holdings may impact liquidity under certain market conditions. And if you're not familiar with the covered call strategy, we do have a video that we just made recently, and it's going to be linked in the description below. So TLTP may be suitable for investors seeking enhanced income through a combination of treasury securities as well as option strategies. Investors may be comfortable with the risk associated with long-term bonds and option writing. And this fund can even serve as a component of a diversified income-focused portfolio as a small percentage of your portfolio. TLTP offers a unique approach to income generation by blending traditional treasury investments with a systematic covered call strategy. And while aiming for higher income, investors should carefully consider the associated risks and ensure alignment with their investment strategies.